Thank you, Aaron, for the introduction and for framing this debate in the broader context of corporate governance and the EU's efforts to build, let's say, an environment and framework for sustainable finance. Now, my name is Philip Gregor. I'm from Frank Bolt, and this is Carlos Cordera from Substantia.
Hi.
So Frank Bolt has coordinated the Alliance for Corporate Transparency project, and Substantia has been the lead research partner, analyzing most of the company's reports that were included in this research. Now, in the next half an hour, we will try to present you the most interesting findings, and more, let's say, the findings that have most, let's say, telling value from this research. But there are simply way too many, and we wouldn't be able to fit them all in the next 30 minutes. So the rest is in the report, which you can pick up at the desk, and they will be, or they are already online on a website, which we will show you a little bit later. So not everything we'll say today is we are not going to capture the research results in their entirety now. But so let me start with actually presenting a little bit the Alliance, because many of you may have some questions about what the Alliance is and what is this project about, what's the purpose, objective, and so on and so forth. So the shortest way I can put it, it is an initiative supported by the organizations that you can, whose logos you can see on the screen, who engage in the project in various capacity. It's important to know that all the responsibility for the results and errors, however, are ours at Frank Bolt and at Substantia. So these organizations are blameless when it comes to the errors. The Alliance, as you can see, is a civil society initiative. We have engaged with investors and with companies and with policymakers externally through various consultations. So we have considered their views as well. The project has started because 2018 was the first year when companies were supposed to produce their non-financial statements, which are required by the EU Non-financial Reporting Directive. And I'll get to a minute into what it actually means. The second reason, though, is that last year the European Commission has adopted the EU Action Plan on Sustainable Finance, which includes many measures targeting the finance sector, but also corporate governance. And all these measures require high-quality information on sustainability matters, both financial material for companies as well as material from societal perspective, that's available to investors as well as to broader society. Without this high-quality information, all the other measures will unlikely deliver their intended results. So in this particular setting, we have started a project which we call the Alliance for Corporate Transparency, whose objective is to look at the way that companies across Europe have actually implemented the requirements of the EU Non-financial Reporting Directive, and whether they report information which enables readers to understand their performance, development, position, and impact, which is the essence of the EU Non-financial Reporting Directive requirements. The research wasn't designed to score or benchmark companies. So we're not saying, well, this company is on the top and this company is 95 out of 100 to 105. Not because it would be impossible. We just didn't think that it would be appropriate to put on the same scales good reporting on human rights with bad reporting on climate change, and so on and so forth. The other reason is that we were much more interested in identifying, let's say, the floor, let's say the agreement on what is the minimum information that everybody should disclose, rather than looking solely at best practice and kind of driving the race to the top. That being said, we will release the data for individual companies that everybody can then check and see, whether they agree with our assessments or not. And all the data, all these assessments have been shared with all the companies that have participated they were evaluated by this project. And we've got about 20% response rate, so 20% of companies actually send us additional information or requested us to do some changes and so forth. In the next 2 years, we plan to extend the research to 1,000 companies. And then we want to wind up the project. So this is really to provide some early data on the implementation of the directive, because we see that the directive will likely undergo some changes in the next couple of years, and we need to be clear about where these changes need to go. And final thing I want to say for the beginning is that although this project is very much policy oriented, the results are of equal importance to the very companies who can see where their reporting is actually not meeting certain minimum standards in terms of specificity, and so on and so forth. So it has this, let's say, dual purpose. So I'll stop there for the introduction and hand over to Carlos, who will lead us through, let's say, the methodology we have used for the assessment. Please, Carlos.
Thank you. Well, the methodology framework that we are using is throughout three different levels. The first level is focused.
I'll just interrupt you.
Yeah.
A screen is missing for some reason. Here it is. So
there's one.
So
okay.
Answer. Please go ahead.
Okay. In the first level we are looking just if which information has been published is addressed that the Non-financial Reporting Directive requires disclosure, and mostly is talking about business model and giving comprehensive information on that, policy, outcomes, risks, and KPIs for different matters. The matters, as you know, is environmental aspects or impacts or risks, social anti-corruption, including human rights and also labor rights. We assess this information, if this information is provided and if it's enough, specific enough to allow understanding the company impacts on all the risks, and if they provide information about the strategies to avoid those impacts. The quality research on that, we are looking for if that information that the companies provide is minimum goals on that, principles and strategy to achieve those goals, and enable assessment if that goals have been finally met or not. The second level, we have identified more specific criteria of disclosure of key environmental issues connected with planetary boundaries and reflect in the European Commission policy on climate change, resource use, pollution, waste, biodiversity, use of water, and things like that. Also about information regarding the employee and workforce statistics related with labor rights, obviously, but also information focused on creating an environment for better protection for employees' interests. And not exactly in the terms of corporate responsibility in this line, and to respect human rights. Because we are another sub-level focused on human rights, how the companies management human rights issues, and this completely aligned to the United Nations Guiding Principles on Business and Human Rights, as the general standard that you know, and also the reporting framework has been developed linked with that initiative. And also we would like to include some specific certain human rights issues related with supply chains, in indigenous people rights, conflict minerals information, digital rights, human rights defenders, things that are more specific that don't include in that standard. But we are making a screening in which companies is providing information and valuable information on that. Also, anti-corruption programs was another area that we are looking for. That information, or the assessment of that information, we are based on global company transparency international methodology mainly, and we are going to say about the results, but mainly is based in those general principles. The methodology that we are using reflects that some criteria is more sector specific, so it's more about material from or Salient issues, depending of the term that we are using, focus on impacts, and other are even on regarding the context specific that the company make the operations. But all the standards and the reference that we are using is related with the international standards, the most known international standards, and European law. And the structure of the analysis is policy, risk, outcomes, and Kpis. That's non-financial. There's a juxtaposition of the international standard referred by the directive on the EC guidelines. And finally, we are making the assessment at third level. The third level is more focused on business strategies, products and services that target opportunities for sustainable development. And we are looking for quantified economic data, echoing the goals of the European Union Sustainable Finance Action Plan, as Philip said, as well as the recent TEG report on guidelines for climate change reporting. Is something more opportunity, not focus in the impacts on risks, but what is the link of the business strategies, link it with the development, sustainable development. Yep.
Thank you, Carlos. There's one important thing here, and that we have derived these issues essentially from a juxtaposition of all the international standards that are referred to the directive, as Carlos mentioned. And we were actually able to see a great deal of alignment in terms of what are the most important issues, as well as what is the type of information that should be disclosed. Obviously, it's present in different ways, in different standards. They have different focus, purpose, and specificity, and so on and so forth. But actually, it wasn't that difficult to see what are the most important issues out there. And we ran an additional analysis of how these issues in the environmental area are connected to planetary boundaries to make sure that these are the issues that really matter. And on the human rights side, well, we've got the international, let's say, order provided by the UN to tell us what's important. So this doesn't come entirely from our head. We've tried to base this as much as possible on some objective grounds. So before we go to the results, there's one more thing to say, and that is, I know I need to go back, not forward now. What is the sample of companies? And look, we've rushed the data. We've really wanted to provide some early reflections. So we've selected 100 companies, actually 105 in the end, and we've tried to cover at least a couple of different or diverse economic regions in Europe. We focus primarily on 3 jurisdictions, Spain, France, and the UK, but we included a couple of controlling samples from Germany, Nordic countries taken together, I mean the EU members, and Central and Eastern European countries, Poland, Czech Republic, and Slovenia, but it's predominantly Poland. Slovenia is there because of the, let's say, importance of the Warsaw Stock Exchange, and where most of the Eastern European companies actually trade their shares, and one of the Slovenian companies that fit into our methodology happened to be there. We could not find, Polish companies proper in that sector. We focus on 3 sectors: energy, which includes actually resource extraction as well, healthcare, and ICT. I mean, there are multiple ways how you can, parse these sectors. We've used SASB as a SASB distinctions as a starting point, but essentially these are the energy and resource extraction companies. The other 2 sectors are a little bit more straightforward. The composition or the balance between the companies in different countries was pretty much well balanced, with exception of those Central and Eastern European countries, where we prioritized from those 13 companies energy sector because of the strong role that energy companies, especially fossil fuels companies, play in the Czech Republic and Poland. So out of those 13, 8 are actually energy companies, so kind of on the same par as the French, UK, and Spanish sample. Also, the distribution between the, let's say, smaller and bigger companies is even, about 20 companies per each segment. The smallest segment is from 500 employees to 1,500 employees, or from 300 million euro to turnover and up. We have 5 categories of this kind. We didn't include companies that are below the threshold of the directive, even though several countries, including Spain, Sweden, have actually extended the application of the directive to companies over 250 employees, irrespective whether they are listed or not. But for methodological reasons, we just focus on big companies only. But there's a great, let's say, divergence between what big means, and the sample is really balanced in this respect. Details are, of course, explained in the report. So now finally we can get to the results, and we'll start with level 1. That means the compliance with let's say the criteria taken from the EU Non-financial Directive directly. I'll show you 2 slides now. And each of the headings, policies, due diligence process, and outcomes, correspond with the major point, which each major point that's directly in the legislation. And we looked at 2 questions. Is information in this area provided? And B, is it specific enough, following the methodology that Carlos explained, that it needs to allow understanding what actually the objectives are, what's the strategy around those objectives, and if this all is evaluatable, if actually it's in principle possible to see whether the company was the company journey on reaching those objectives. And well, as you can see, and that's one highlight that's really important. Virtually all companies acknowledged that these issues are important for them. Very few companies didn't report any policies. And those who didn't even bother to provide explanations, so those are the weird companies. But pretty much everybody is saying, yes, environmental and social issues are really important for our business. Well, when it comes to actually specificity of the disclosure that allows to understand the company's position and impact, the numbers are not so great. It's about 50% in the environmental sector and less than 40% for the social issues and anti-corruption issues. And please, we haven't really checked whether the information is comprehensive, whether it's material in terms of dealing with the issues that are material for the particular company. Anything company said in one of these 3 areas was counted in, and if that information was specific in its own logic, then we said it's specific. So if you dig deeper, well, you can't get any better numbers than this. That's why I'm saying. If you dig deeper, you'll probably get a little bit starker results. The other thing I wanted to mention is that due diligence processes are really, really important in social area. That's the core of the, let's say, human rights responsibility. And we got slightly less than 40 companies even mentioning it. Here we are not even talking about specificity, just about mentioning human rights due diligence or social due diligence. So that indicates quite a big gap in human rights reporting. We'll get to it in the next couple of slides. And finally, the outcomes. Again, we got 2 categories: where they provided, where they explained, and then where they linked to the objectives of the policies. So first, the policies actually had to have some kind of evaluatable objectives, and you can see the numbers for yourself. It's the same pattern, really, so I will not get into detail. Or maybe let me say one thing. It indicates that there is a substantial minority of companies that actually are able to provide specific information. So it's not all the dark. It's certainly possible to do this. But the second slide on this level 1 assessment concerns risks and then KPIs. And pretty much everything what I've said about policies and outcomes can be said about risks. We again looked at the question, is the risk description specific? Does it allow what the risk is actually about? And we didn't discriminate between risks to society or risk to company. It's just, it's up to the company to say what the risks are and frame them. And then our qualitative assessment was on in terms of, can we actually understand these risks? Do they actually give us enough information to see what's their scale and company's exposure and so on and so forth? When it comes to the KPIs, well, I would rather not get into analysis at such a general level. This really needs to be looked at for specific issues, and we got a couple of slides about it. So we just included here so we got the comprehensive picture. So everything you see here just corresponds to the headlines in the directive, to the directive itself. We have also recorded, we also look at, how different regions compare, and Carlos will have something to say about it now.
Yeah. Nordics in our sample provided significantly better information than the rest, especially regarding specificity of the policy on due diligence in social area. Central European companies significantly worse, and there were some specific difference between regions which may deserve further analysis. Full results are available in the annex. And regarding the size differences between companies, in general, there's a progress from the smallest to largest company, but it's not that profound. The exception is in due diligence disclosure in social anti-corruption area, where the largest company segment was much more likely to report.
Yep.
Now, the research also provides data on business model. We found that this in the narrative, this disconnected business model with the information of the non-financial statement, which can see disruption of the environmental, social, and governance risk. Most of them use different standards. Around 65%, I remember GRI and a similar figure in national standards, because there are also national standards, and CDP is other standard that is usually used for reporting. But the point is, when we are making the research, we are not making research if that's right. When they say we are using GRI or CDP, if the information is addressing that standard, we just put in check if they say that. So, regarding the accessibility of the information, 1/3 provides summarized Kpis statements, and half provides information in clear structure and includes links to the information that it refers to. Because most of the cases, and around half, they say, okay, this information, we are provide you this information, but it's not in this report, and put it. Sometimes it's just one tick, or one link, and sometimes could be between 2 and 6 different auto-reference between documents.
Quite often, companies refer to information without actually just indicating existence, but not providing a link, not even providing the name of the document, and that's what we meant that the information is not traceable. We found this in 50% of reports, so it's quite a problem. And also, it was particularly staggering that only 29% of companies provided KPIs, whatever they use as KPIs, in a summarized statements. A majority of companies provided the KPIs, but you have to look them here and there, and there was nothing like a statement. But still, 30% of companies did it, and that's what we would consider a good practice, certainly. Okay, on to more specific issues. We are going to provide information now on climate change and human rights specifically. We are not going to provide here information on, let's say, broader employee and workforce issues and on specific human rights issues, because we simply don't have time for that. But it's in the report, so we'll just take these two as let's say, almost a case study examples. So first, the climate. We've provided, we look for the information on climate in all sectors, because there has been very high level of reporting on climate. I mean, 90% of companies spoke about climate change. Now, when we look at the disclosure of policies, that number goes down, as you can see. Well, if I haven't specified it, all the numbers are in percentages to allow the comparisons between the sectors. So, as you can see, when it comes to the actual policies, the disclosure is not that frequent. About 20% of companies don't describe any policies, and then when you go to the specificity of those policies, though, those numbers go down. Obviously, energy sector is a little bit better in this respect, because climate change is such a huge issue for the energy sector. The second block, the quality of policy disclosure, just looks at essentially forward-looking elements in those policies, such as this company has a climate target, or does it report about the climate target without judging about whether the climate target is appropriate. But then, do they claim that the target reflects the Paris targets or Paris Agreement? And then, do the companies report on the actions and outcomes? This was not a qualitative assessment. It was just, really checking if they mentioned something like that, and you see the numbers. So slightly over the half of the companies are providing information then on these main categories. Well, having said all of this, let's face it, climate change issues are most important for three sectors: energy, transportation, and agriculture. And one of these sectors has been included in our research, and we've looked into more detailed criteria on reporting on risks in this sector, and we'll look specifically at reporting criteria which we derived from the TCFD recommendation, Task Force on Climate-Related Financial Disclosures. And Carlos will present that on the next slide.
Okay, as you can see in the figures, we didn't consider, for example, not applicable in this case in A/A is because they don't give any information on that. It's not because the meaning not applicable in that case. But we didn't consider in depth the quality of the company's disclosure. Therefore, real numbers may be actually lower than what you see. The numbers merely indicate the companies provide at least rudimentary information of these aspects on TCFD recommendation concerning risk reporting. It's a particular interest as a result concerning the time horizons and 2 degrees scenario, as you see in the slide. Taking together both aspects, both information, they indicate that most energy companies don't disclose their long-term plans to transition to zero carbon economy. However, some do. So but in general, there should be weaknesses of the reporting. There are some regional differences. Northern companies provide the specific information on policies and their targets most often, and followed by Germany, Spain, and France. Below the average is mainly UK and Central Eastern European companies. And this is worrying for Central European companies region because most of them in the region have big companies which are heavily invested in coal.
Yeah, essentially of those 8 companies we've analyzed from the Czech Republic and Poland from the energy sector, all of them are heavily invested in coal, and yet they don't actually even speak about these issues. So there's a crash coming, and the last thing you want to have is the Polish economy to crash, and the other countries with, let's say, a little bit weaker governance. So there are all kinds of aspects related to this, not merely environmental, but the future of the EU may be at stake here, actually. But anyways, I come from the Czech Republic. Happy to speak about all of this, but let's move to the next results. One screen we don't show you here, which we will find in the report, is the actually numbers on the use of KPIs, climate change KPIs, or greenhouse gas emissions, and so on and so forth. Pretty much everybody uses them and reports them. It's almost 100% use of them in the energy sector and the other sectors, over 70–80%. Quite a lot of companies are reporting Scope 3 emissions. So the problem is not so much with the, let's say, snapshots of performance, rather the forward-looking plans. That's the missing element that we have seen. All right. We have analyzed a number of other environmental issues. We will not go into the detail. We've got information of policies, outcomes, risks, KPIs, and so on and so forth. We just wanted to, highlight a couple of numbers, just to instigate the discussion on, appropriate environmental indicators. So we saw a very low, very few companies, 20% of companies reported on pollution for transportation. So this is clearly something that we have not taken up yet collectively. And yet transportation is a major source of pollution. It may be subject to all kinds of risks with regard to the energy transition and so on and so forth. So that's one interesting number, and we don't want to interpret it too much. It's just a number. Also, quite a lot of companies that are involved in production processes, so in our research those were energy and healthcare sectors, report on use of water. It's a no-brainer. But much less companies actually are reporting on or providing additional information. What does it mean in terms of water-scarce regions and borderline regions. So you get a number, and you're not necessarily, you don't necessarily know whether this is just about companies being more efficient and cutting costs, or whether this has some connection with real risks, because there won't be water, there might be policy backlash, and so on and so forth. And this doesn't have to be an indicator; it can be just an information. We count it as yes, even if the company merely said, well, we don't actually extract any water in water-scarce areas. That was good enough for the purpose of our research. Still, you see only a third of those companies that reported on water use provided this context. And on biodiversity, well, this is pretty much for the energy sector, but most companies actually have a policy and substantial, let's say, minority reports on the specific issue, so there's something going on there, but only 11% actually then tell you about the actual impacts. So without knowing impacts and knowing the management of those situations, how can anyone say whether the company's reaction to those issues is appropriate? So there's a, let's say, big gap there. But anyways, on to human rights. All right, there will be two screens here again. The criteria you're looking at are derived, again, they try to mimic the structure of the NFR Directive as much as possible, but they need to account for the specificity of human rights disclosure. And the leading standard out there in terms of corporate responsibility to respect human rights are the United Nations guiding principles. And there's a reporting framework which has been created to translate this responsibility to respect human rights into management and reporting criteria, and that's mostly what we have used. And even though we've based it on this single standard, it's making its way through the other standards. It's universally endorsed, so this is actually what everybody seems to agree on. So, well, first of all, as you can see, when it comes to the commitment, 90% of companies bothered to express their commitment in the report. So it seems that everybody acknowledged this is an important issue. Then we ask about the human rights due diligence, and the numbers go down, and we ask about the human rights due diligence process because that's what's required in the directive. The numbers are skewed by the fact that some companies provided this on, let's say, on issue-specific basis, and here we'll look at, let's say, general human rights due diligence disclosure. But as you can see, there's a drop. But that drop continues when it comes to the most important thing when it comes to human rights disclosure, and that's the statement of salient issues. This is not about telling companies, well, report on this particular issue. This is about companies identifying what are their salient human rights issues, either direct or connected to supply chains and so on and so forth. And we only look at the question whether it was provided, whether it was specific, whether it was just supply chains and labor rights, or whether it was a little bit more specific than that. And then we also look whether some of these companies actually provide information on impacts, and you can see how the quality goes down. And again, what I've said about earlier just count is valid here as well. Without that information, it's impossible for an external person to see what actually is going on, what are actually the risks and impacts, and so on and so forth. So one more screen, which will deal with the management of these issues. And you see the same story. Actually, quite a lot of companies provide the policies on those individual issues that they have declared it or identified as salient. But what's really most important here is the evidence of effective management. And those can be indicators, those can be examples. We didn't discriminate, and we are under 10%, or we are at 10%. So 10% of the companies included in the research just included some kind of evidence that maybe can help you to understand the effectiveness of their management of those salient issues that they themselves identified. So this is a major gap that probably needs some attention in practice and perhaps in policy making. Yes, please, Carlos.
Just one highlight. Very few companies report on their high-risk supply chains, but 66% do it, so it's possible. So, but the information is very scarce in the reports, and one of the most risk aspects, the supply chain in high-risk areas.
Yeah, it depends on the sector, but mostly it's supply chains. And the thing is that these 6%, there's 6 or 7 companies, right? So 3 or 4 of them were actually reporting on the conflict mineral supply chains, and there's a regulation, and there was probably an effect of the both U.S. and EU regulations in the area. The others were energy sectors who reported on their immediate suppliers in kind of a high-risk areas where they operated. So it's another point. There's more information on supply chain reporting in the report, so I encourage you to take a look. So the next one, if I'm mistaken, should be anti-corruption. So please, Carlos.
Yeah. Well, in the second level also, we are looking for information about the anti-corruption programs. There's a high level of disclosure on commitments and policies, as in the previous areas of the information. Relatively few companies actually explain the main elements of their anti-corruption program. Likewise, the applicability of the company rules to third parties is explained in 60% of the companies of the assessment, and respect to business partners, and 43% for agents, advisors, and intermediaries. And this relationship is a very risk on anti-corruption approach. And even lower numbers have been recorded for information about the implementation, evaluation of the system. The effectiveness of the policy, effectiveness of the management of the actions, even to have been addressed or not, the risk, usually is not in the report, or is very few information on that. In the case of the assessment on if the anti-corruption strategy is effective or not, is very few information on that. And all in less than half describing consistency checks and balance on this policy as well.
Yeah, we should probably mention that here the criteria have been derived from the United Nations Global Compact and Transparency International methodologies, and there's a long table with all the criteria. We've just picked the ones that are most illustrative of how specific the disclosure is. So we're nearing to the end. Level 3, there will be just one slide on level 3. If you may remember that this is about business opportunities connected to sustainable development. And this really connects to the EU Sustainable Finance Action Plan, which tries to reorient capital flows, not only from harmful activities, but towards activities that contribute to the transition to sustainability. Of course, the climate change issues come on the top in terms of importance, but there are various numerous ways how companies can actually exploit or use the opportunities provided by the transition to sustainability. Also, in the recent, I don't know whether it's a draft or a final report by the technical expert group set up by the European Commission on climate change disclosures, which is actually a very good report. They also speak of the need to provide essentially quantitative information, economic information on companies, let's say, business strategies in this area. Well, as you can see, between 1/2 and 2/3 of companies speak about these issues in their reports, but these numbers go down when it comes to these economic indicators. There's certain exception when it comes to the energy sector. It's because of the renewable energy systems. These are the individual issues that we have selected for these particular sectors. But we have also include a general criteria where we actually provide these numbers for any environmental or socially oriented business strategy. But those numbers are largely the same. Most of the companies actually, if they spoke about those issues, they spoke about these. Oh, I'm sorry, about these for issues. So the difference in the energy sector is due to the topic, because essentially every energy company has something to do with renewable energy these days. And they do provide information. Still, the economic numbers and performance numbers are actually provided less often than one would expect. So this is not necessarily something what the EU Non-financial Reporting Directive requires, at least when it comes to strict reading, but it's important contextual information in the broader policy framework. With that, we can conclude. These are just the highlights. We are not saying we know how to solve these issues, but these are the gaps, the most significant gaps we have identified. Transition plans to zero carbon economy, in particular in the energy sector, and anything below 100% is insufficient for so many reasons. We got coal companies, oil and gas companies involved, as well as renewable energy companies involved in the research. When it comes to the key environmental indicators, those that are provided are often not really telling material information. I use a couple of examples. There's a huge problem with the identification and management of human rights issues or reporting on it in terms of specificity. When it comes to the anti-corruption programs, yeah, we perhaps need a little bit more specific information as well, but the data were more balanced here in this particular aspect than for the key environmental and social issues. And as I've just mentioned, quantitative data on business opportunities or on business strategies aiming at these opportunities are generally missing.